What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, I'm so hyped up, I'm slobbering all over the place. Hit that like button. Turn that thing blue. But today we're gonna do a little bit something different. I was bored. It's nighttime. I'm bored. I was watching some YouTube videos and I was like, yo, I should create some content. And I've always wanted to do this style of video, which is a reaction style video. And I was like, let's do it today. I have some content, I'm gonna react to it. And it is me listening to one of the greatest investors of all time, Peter Lynch, who over his years when he was handling the Magellan Fund, he had a rate of return of like, I think 20 to 30% year over year. So he did really well for himself when he was managing that fund. And so I was like, there's a lot that we can learn from this investor. I mean, I read some of his books. I would get up and show you, but then that, you know what? I'm going to show you. Where's the other one? Oh yeah, it's my backpack. All right, so I'm back. So these are some of his books that he's written. One Up on Wall Street, Learn to Earn, and Beating the Street. I like his books because they're also pretty simple to read and very good for anybody who wants to start investing. But that's the reason I like to listen to him talk as well. So in this video, I'm just gonna put my commentary, a little bit of commentary on some of the stuff that he says. It's a 10-minute long video. I don't know if we're gonna go through the whole thing, but I think it's very interesting. And one of the things I wanna impact on you, I said it when I did the collab with all the other investor channels that I know of, was to learn from other people, and that's one thing that I like to do. And one way to do that is literally to watch videos of people talking about investing. So let's begin this mug up in this street.
I think the public can do extremely well in the stock market on their own. I think the fact that institutions dominate the market today is a positive for small investors. These institutions push.
So when he talks about institutions, what he's referring to is the big bankers, you know, the money managers and the big investor firms and private equity and SPAC managers and those kind of things. They control, I think about 80% of the market is controlled by them, which means they can't move as fluidly like you and I can move, which means we have opportunities that they can't take. Let's keep going.
Push stocks on usual lows, they push them on usual highs. For someone that can sit back and have their own opinion and know something about an industry, this is a positive. It's not a negative. So that's what I want to talk about. And the single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press.
So this point that he's bringing up is so important. I can't tell you the amount of times that I've been on like Twitter or on Instagram or on TikTok or anything, and people are just telling me about different kind of stocks. They don't know anything about the company. All they know is the ticker symbol and they heard it from somebody else. I remember earlier this year or earlier in 2020 when we went into lockdown and everybody was chasing after Zoom and they were searching for the wrong thing. In other words, they had no idea what they were buying into. They were just searching along. But let's keep going.
Down, they'd say the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason I own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. And that's true, I think, about 80% of people that own stocks. And this is the kind of stock people like to own. This is the kind of company people adore owning. This is a relatively simple company. They make a very narrow, easy to understand product. They make a 1 megabit SRAM, CMOS, bipolar risk, floating point data I/O array processor, an optimizing compiler, a 16 dual port memory, a double diffused metal oxide semiconductor monolithic logic chip with a plasma matrix vacuum fluorescent display. It has a 16-bit dual memory. It has a Unix operating system, 4 Whetstone megaflop polysilicon emitter, a high bandwidth, that's very important, 6 gigahertz, double metallization communication protocol, an asynchronous backward compatibility, peripheral bus architecture, 4-wave interleave memory, a token ring interchange backplane, and it does it in 15 nanoseconds of capability. Now, if you own a piece of crap like that, You will never make money. Never. Somebody will come along with more whetstones or less whetstones or a bigger mega flop or a smaller mega flop.
So let's replace the companies that he just mentioned, the whole list that he just went down. Today, it would be more like the biotech stock. Like they're doing something unbelievably new. They're gonna solve the human genome and they're gonna do all this magical stuff. Or the other thing is, oh, we're in the cloud phase now. And they're the meta cloud. They know how to handle the meta of the cloud. And it's like all of this fancy stuff that's being told to you. And it's like, yo, how about, just buy Walmart or buy Apple or buy Target or buy Home Depot or buy any of the things that you actually will see. Oh, people are no longer shopping here. Oh, people are shopping here. People are no longer buying this product. Oh, people are buying this. Like, you don't have to search high and wide for actual companies to invest in. You don't have to do all of that. What are the products that you actually use on a daily basis? And invest in that. Like, do your research in those companies. Actually start from that point rather than trying to find all the nook and crannies and all the fancy things that are out there. If you don't understand the business, don't invest in it. It's not that hard, guys. Like, literally. But anyway, let's keep going.
You won't have the foggiest idea what's happened. And people buy this junk all the time. I made money in Dunkin' Donuts. I can understand it. When there's recessions, I didn't have to worry about what was happening. I could go there and people were still there. I didn't have to worry about low-priced Korean imports. I mean, I just didn't have, I can understand it. And you laugh, I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle. And it bothers me that people are very careful with their money. The public, when they buy a refrigerator, they get a Consumer Reports. They buy a microwave oven, they do that. They ask people what's the best kind of radar range or what kind of car to buy. They do research on apartments. When they go on a trip to Wyoming, they get the Mobile Travel Guide, or California. When they go to Europe, they get the Michelin Travel Guide. People will hear a tip on a bus on some stock, and they'll put half their life savings in it before sunset. And they wonder why they lose money in the stock market. And when they lose money, they blame it on the institutions and program trading. That is garbage. They didn't do any research. They bought a piece of junk. They didn't look at the balance sheet. And that's what you get for it. And that's what we were being driven to. And it's self-fulfilling. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stocks that go up. Coca-Cola, this is very magic. It's a very magic number. Easy to remember. Coca-Cola is earning 30 times per share what they did 32 years ago. The stock has gone up 30-fold. Bethlehem Steel is earning less than they did 30 years ago. The stock is half its price of 30 years ago. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away.
I think I'm gonna end it with just that first tip, because there's a lot that he said in that first tip of just buying what you own. I mean, right now with social media, with Twitter, with TikTok, with Instagram, with everybody becoming a stock guru, everybody telling you exactly how to pick stocks. They know exactly how to sell you 1,000 return stock market pick. At the end of the day, do your research, buying stuff that you actually own, like stuff that you actually use. Like, I have a Windows computer. I know that the market is 80% Windows. I like the Surface Book. I have a Surface Book. So guess what? That was one of the reasons that I bought Microsoft. Because I saw them changing the way that they did business and they were making actual good products. Buy stuff that you actually know. Don't just go based on, oh, I heard this guy say that this is the best stock to use. I was following this YouTuber and he said this is gonna be a good one. No, man, like, stay focused on the goal at hand. It's not about betting on every single thing. It's about buying stuff that you actually can explain and you can understand and you can follow on a regular basis. And that if they do a news report, or in fact, even before the news get released, you'll know about it. Like, one of the things people invested in, what's it called? Cheesecake Factory. How did people know to invest in Cheesecake Factory? Because Cheesecake Factory had a line outside of it all the time, even during the pandemic period. So invest in stuff you know. Don't just go based on what you heard. Actually do your research. Actually understand the companies that you're buying into and then buy into them. All right? But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you loved it, hit that subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And I'm out. Peace.